Hi, um, this is Tawanda here. So, we want to talk about spot trading. Once you think something is complicated, it will be complicated for you. But if you believe that it's simple, your mind will process it as something simple. So, spot trading is simple. This is the most simplest way of trading when it comes to cryptocurrencies. There are different ways of trading. Okay, I think more than five kinds of different kinds of trading cryptocurrency. So spot trading is the simplest one. Why? Because you are just buying and selling. Okay, and it's it's not as risky as futures trading and other leveraged ways of trading, because if you buy 10,000 coins with your $100, what changes is the value of your coins, but the number of the coins remain the same and they remain yours. If the project rug pulls and go down, you have lost the 100, but the coins are yours. So the risk with spot trading is the minimum risk that you can experience in crypto. If something happens to the project and the project goes down, that is the only time that you lose money. That is if the project completely goes down. But if it goes down and then bounces up again, it means you haven't made any loss, because the only time that you make loss technically is when you sell. Okay, if you buy something for $100 and then the price of that particular asset goes down and now you are holding $40, it's not loss really until you sell. As long as you are holding that 10,000 coins, when the price goes up, you still have your money back. The only downside to holding is time. If you were supposed to make five trades in a month, maybe you are now being delayed because you are in a loss. I think this part is understood. Now, so what is spot trading? I'm believing that many of you watching this, you've already gone through my crypto in 5 days. Some you went through Bitcoin in 7 days. Some of you, many of you, you already know how to buy and sell. That's basically what spot trading is. The difference between spot trading and a portfolio is a portfolio you are holding for an extended amount of time. Maybe you're holding for 3 months, 6 months, 12 months. It's a portfolio, okay? It's your investment. But spot trading, you are buying and selling frequently through the day or days or even a month, okay? Spot trading, you're just buying low and selling high to make a profit, okay? And then portfolio, you bought low but you are holding for a very long time. So we said our portfolio, we cannot talk about our portfolio. Once you have made your investments, you are good. If you want to keep on topping with the money that you are hustling, it's fine. But for spot trading is to grow our money, and then we see where we are going to be by mid-year, and then we decide what we can do beyond that. Now, this is Binx Exchanger. Am I recording? I might be talking to myself. Okay. So this is Binx Exchanger. The same way you buy your coins for portfolio. I'm sorry to those who already understand how to buy. I'm treating you the same with those who don't know. So if you click on spot, or maybe I should do what? Circle it. There. If I put an arrow like this, spot, you see, if you click on spot there, you get this interface, okay? The same way you buy your coins, as if you are investing, you are building a portfolio, is the same way you trade, okay? So now we are on spot. There are a few things that I want to address. I hope this video, it won't be too long. There are a few things I want to address. You see those two candles there. If you click there, even if you are not going to use it, but it helps you to just understand things. If you click on those two candles there, it gives you a chart. Okay, it gives you a chart for that particular asset or that particular cryptocurrency. Okay, this chart, these green things and red things, to those who don't know, they are called candlesticks. Okay, they are candlesticks. Green represents going up, which means profit. Red represents going down, which means loss. Okay, so it's very, very important that when you are buying crypto, you try and buy when the candles are red, or when, let me put my pointer. So it's either the candles are red or this percentage is red, 27% negative. It means you are buying red candles, or you are buying a red market. I hope you understand what I'm trying to mean. The cryptocurrency has gone down by 27%. So if you buy, when it goes up again, you're already in profit. It's not really a good thing for you to buy when it's writing the 80%. It's not a good thing, because once the price goes up, there is nothing that keeps on going up. Once it goes up, you have to know that if you see it at 30%, 40%, 50% up green, it means there are people who bought when it was down. Now they want to sell. That may drive the price down, and you will find yourself maybe in a huge loss. You have to wait again for the price to go up. So it's very, very important for you not to FOMO and buy green candles. So these candles, they have different shapes, and each shape is giving an interpretation to the direction of the market. Okay, it's giving an interpretation to the direction of the market. I don't really want to touch more on the technicalities of how to analyze a project. Why? Because I'm doing this on my phone, and I will end up confusing you. Okay, so I just want you to understand the basics. If you see the red candles going down, it means that is a loss. If you see the green candles going up, it means you are in a profit. Now it depends with your entry point. Let me give you an example. But before I do that, I want to show you something again. There is what we call a time frame. A time frame gives you a different pattern of the candles that you are seeing, the chart that you are seeing. So we have got a 15-minute time frame there, 1 hour time frame, 4 hours, 1 day. If I click on more, we can even get to maybe 1 week or 1 month. Let me click on more. You see, we have 2 hours, 6 hours, 8 hours, 12 hours, 3 days, 1 week, 1 month. If I click on right now we are on 4 hours. If I click on 1 day, where is 1 day there? We don't have a 1 day. Okay, 1 day is there on top. If I click on 1 day here, can you see that the chart is now different? So if you change the time frame, each candle represents that time frame. Right now I've clicked on 1 day. It means now each candle is representing a day. If I click on 4 hours, it means every candle that you are seeing there, whether green or red, it's representing 4 hours. If I click on 1 hour, it means every candle, whether green or red, is representing 1 hour. So can you see that these candles are broken? So each broken candle, whether red or green, whether the red is joining with the green or green joining with the red, it means it's representing 1 hour. Why? Because we are using a 1 hour time frame. Okay, so that's what these time frames mean. These time frames, they give you a different chart. Okay, these are basics. Now let me go back to 4 hour time frame. What else can I share on this? I also want you to know that you can see the highest price this project went to in the last 24 hours, the lowest price, and also the volume. Let me remove that. and also the volume. You can see that see where it's written 24-hour volume USDT there, 8,000. I wanted to go on, sorry, I wanted to go on so you see 24-hour volume, right? It's what? 8,000. It's not a good volume at all. Not a good volume at all. So if you're trading a project with low volume, you will suffer from what is it called? That word that we use on decentralized exchanges. Slippage. It's also there on exchanges. The lower the volume, the higher the slippage. So if you've got $100, if you want to buy that project, you may end up seeing that you have spent $60, $40 is lost due to slippage. However, you're not going to be looking for these things on your own, because I'm going to be giving you what to buy, because that's what I'm also going to be buying. This is only for educational purposes. Now, what else do I want you to see? Okay, let me change the time frame. Yeah, let me change the time frame. Let's say we have managed to get a coin to buy, and then you buy a coin here. Let's say the moment that we get the coin, that's where it is in price, and then it goes up, and then you sell here. It means you are now in profit. Even if it goes all the way down with this red candle, after you've already sold, your money is now in USDT. Let's say you've made 50% profit from $100. Now you've got 150. After you sell, even if the red candle goes down, you are already in USDT. You still have your $150. Or let's say the project is where it is right now. We are on a 1 day time frame, and then we say, guys, let's buy this project. We think it's going to bounce up, and then we buy the project from here where it is right now. Okay, and then from there it starts going up, and then maybe you choose, to sell here, or even to sell here. It means you're already in profit. Maybe you've made 10%, 20%, 30% profit. I don't know if I'm making sense, but these are just candles. But let's go back to the interface that you are used to, this one. So we said the same way you buy coins for portfolio is the same way you buy for spot trading. We said we want to take at least 5 trades in a month, each trade giving you at least 20%. What we are doing that of trading, there is intraday trading, and then there is swing trading. What we are taking is more like a swing trading, a trade that goes even for 3-5 days, even for a week, until you are in profit. Okay, we are hoping that we have more days where we get in profit quicker than, there are times when you buy and then the project even goes down, like what Release did. It sucks. So let's say I'm just using 100 as an example, but you are starting with an amount. Okay, let's say I've got $100 on this account, and then we say let's buy B3. Okay, what do? We all know by this time. Those who are saying they don't know how to trade, I think already you are seeing that it's not as difficult as you thought it is. You are buying using what happened? Let me change back to my red color. I was using a red color on my pointers. Okay. You have to buy on market. If you are buying right now, it means you buy under market. But if you want to put a stop, if you want to put a limit order, of course you can click on market and then you put your limit order. Putting your limit order, what it means is that is if we actually use a limit order, it means you are anticipating that this project may go down a little bit. For example, let's say the project is here. Ignore those red candles. Let's say the project is there, up there, okay? But you are anticipating that maybe the project will go down to this level. So I want to wait to buy by placing a limit order here, so that even if it goes down whilst I'm driving, sleeping or working, it will automatically buy for me. That's when you use a stop, a limit order. Let's say you want to buy at 0.007. What do? You choose limit order. I've already chosen limit order there. Limit order right from market order. From there, under limit order there, you are now putting the price that you want to buy with here. Let's say you want to buy at 0.007. So let's remove these figures. We are left with 0.007. Okay. Let's say it's supposed to fall from up there down to where it is to 0.007. If you want to spend the entire amount that you have, you are supposed to drag this dot all the way to the other end. That's you spending what? Spending the rest 100%, the amount that you have. And then you click on buy. You click on buy here. Remember, the buy up there and the sell up there, they are for direction, but for execution, you click the buy or the sell that is bigger at the bottom right there. That's when you click buy. It means under open orders, you see, I wish if I had money in this account so that I can illustrate perfectly. But under open orders here, you see an open order that is waiting for the 0.007 to come down there, and then it gets executed. If it doesn't go there, let's go back to the chart. If it doesn't if it doesn't go to 0.007, remember we said instead of you buying there, you will be thinking that it will go down there, right? But let's say it doesn't go down there to your 0.007, and then it goes down a bit and then it starts going up. It means your order of 0.007 will never be triggered unless if it comes down again. Okay, I hope it's clear there. So you put on limit if you want to set up your own buy order, and you put on market if you want to buy right now. That is the same thing if you want to sell. You click on sell. If you want, let's say you are in profit, okay, you are in profit, you bought this asset here and then it's now there and you want to sell. You can sell using market order there and there. You are selling under the current prevailing market price. But if you want to set, let's say you are assuming that this project, of course, where it is right now, I'm in profit, but maybe it will keep on going. Where is my pointer? I bought here and now we are here, but what if it keeps on going up? So let me put my stop loss here so that if it's going down, it will automatically sell. If it keeps on going up, thank God. What do? Again, you come back here and use limit order, and then you put, maybe you want to sell at 0.001, 0.018. If it goes down to 0.018, I don't want to go in loss. Let it automatically sell. If it keeps on going up, I will be in profit. I will check whenever I can. What do? You come, you put your 0.018, you drag this, and then you click on sell, the bigger button. After clicking on sell here, it will come to open orders. If it goes down to that price, it will automatically sell. If it keeps on going, you just check your phone and you see yourself in a lot of profit. I don't want to cover a lot of things on this video. I will repeat videos like this, covering where you feel like you are finding it difficult to understand. So when I send a coin that you are supposed to buy, and then you come to your Binx, what do at the bottom? Spot, and then you come and you click here to search for the coin that you are looking for. Let's say the coin is called Swift. You type Swift. You type Swift. We don't have Swift. Let's say the coin is called what? It's called Pro. You come, you type Pro there, and then search for the Pro that you are talking about. Let's say it's the one at the bottom. You click on it, and then you go ahead and buy. If you just want to check the movement of the project, you go on candles, click on candles, 1 day time frame, 4 hour time frame. My network is now dragging. Or maybe you can even go for more and click on 1 month time frame, to those who understand, obviously, how to interpret the project. Okay, but another best way to go is to just go ahead and buy, since it will be a signal to say, guys, let's buy this particular project. And obviously, every time when you log into your Binx, even besides going to spot trading, you will see your figures changing. Your money will be changing there. You will see the value of your money changing. Alright, this is just part 1 of introduction to spot trading. I will be covering other parts, especially making some 1 minute videos specifically to address something, limit orders, take profit, stop loss, those small things that I will be finding out on Binx that I feel like maybe you should use. I will be answering your questions using those 1 minute, 2 minute video, 1 minute, 2 minute video. But I think this is just clear. This is so basic. As basic as it is, we can get results if we stick to the rules. 20% in a trade out, 20% in a trade out, or 20% in a trade, you lock your profit. If you make 150 in a trade, it's fine. There are even other coins where you can buy with 100 and maybe it grows to 300 and then you sell. You are now waiting for another signal to spin that 300 to 600, and then we keep on going. Alright, I think this one is enough. Cheers.